Zapata, and I am the Vice President of Development at Trickle Up. And I am delighted to welcome you all here tonight to Trickle Up's 100 Women Speaker Series event, which is titled Wall Street Pioneers Tell All. We are honored to have three really extraordinary guests with us tonight. First, our moderator for tonight's discussion, Michelle Caruso Cabrera, who is to my right. Michelle is the Chief International Correspondent for CNBC, and I will add that Michelle was actually my editor-in-chief when we worked together at the Wellesley News, together during undergrad about 100 years ago. Michelle also appears throughout CNBC's Business Day programming, anchoring and reporting for the network. And previously, she was the co-anchor of the program Power Lunch. She's reported for NBC News from Baghdad, and she has traveled to Cuba, Brazil, and Venezuela, reporting on and producing groundbreaking stories about those countries' economies. She is an author. She has been awarded broadcaster of the... Sorry about this.
Maybe you don't need it. Yeah, you may not need
it.
Okay,
I'm just going to put this over here. Sorry, Michelle. Just turn that off. Awarded Broadcaster of the Year from the National Association of Hispanic Journalists, among many other honors. So welcome, Michelle. Next, we have Linda Strumpf. Linda is the former Chief Investment Officer of the Ford Foundation, who I'm very proud to say is also a member of the Trickle Up board. Linda was Institutional Investor's Investor Lifetime Achievement Award winner last year. And I particularly loved their article announcing their selection, which began, and I quote, "In 1982, Linda Strumpf made the fateful decision to use her money management skills to improve the human condition." Fateful is not a word that I would use. Inspiring, probably instead. Linda earned her BA in economics from Penn State and an MBA at NYU. She began working in asset management at Equitable, and she joined Ford first as the Director of Equity Investments, and in 1993, she became the first ever female CIO of a major foundation, taking over Ford's then $6.4 billion portfolio. After Ford, she was the CIO of the Helmsley Charitable Trust, and she has a really bad cold tonight, so we are really, really delighted that she didn't cancel on us, but thank you, Linda. Finally, we have Lulu Wang, the founder and CEO of Tupelo, of all things for me to mix this up, Tupelo Capital Management, which she founded in 1997. Before founding Tupelo, Lulu was an executive vice president at Jennison Associates Capital Corporation, where she managed more than $4 billion in assets for pension, endowment, and mutual funds. She served as the managing director and the senior VP at Equitable, and Linda and Lulu actually overlapped during their time there. She earned her BA from Wellesley College and her MBA from Columbia Business School. These women are all clearly pioneers in their professions in every sense of the word, but we invited them here tonight because they are also pioneers in their commitment to giving back to the world around them. Between them, they have sat on and worked extremely hard for nearly a dozen boards of directors, for nonprofit organizations, for their alma maters, and for cultural organizations across New York City. By helping to grow the Ford Foundation's portfolio, Linda's work was truly pivotal in helping Ford be a catalyst for everything from revitalizing New York City's most under-resourced neighborhoods, to launching public television, to helping change lives for countless people around the globe. And in 2000, Lulu and her husband gave the largest single gift to women's college in history, giving a major gift to Wellesley to build a new student center on their campus. Tonight, Michelle will guide a half-hour-long conversation that we will have with both of them that will be followed by a 20-minute Q&A. So I ask that you please just hold your questions until the very end, and then ask away when we get there. So we also hope that you can stay for about a half an hour after for a little food and some wine to get to know each other and get to know us a little bit more. And last, before I hand the baton off to Michelle to get started, I really want to thank MetLife for hosting this event and for giving us this beautiful venue, and also want to thank MetLife and the MetLife Foundation's commitment to financial inclusion for people around the world. That, I think, was really best exemplified through the MetLife Foundation's $250,000 grant that they gave to Trickle Up. last year to support our program in India, where every year we help thousands of women and families living in extreme poverty, women and families living on literally less than $1 a day. We help them take their first steps toward establishing economic self-sufficiency, and we do this by helping women join savings groups of 10 to 20 other women in their communities to pool their savings and their capital, and then helping them to start businesses of their own to improve the livelihoods for themselves and also for their families. So we thank Evelyn Stark from the MetLife Foundation, Dennis White, who are both here with us, and also Liz Forget, who has been a really great advocate and supporter of our work. And lastly, the 100 Women Campaign, what this is and why you're all here. 2 years ago, Trickle Up launched the campaign really with 2 objectives. The first objective was to bring a diversity of women from a diversity of industries together, to learn more about our work and to spread the word about our work to their communities. And the second objective was to raise money for our program, and we've been able to do just that. We've raised $100,000 in that time to support our program in West Africa. And with the success that we've had in West Africa, we are going to be earmarking the support that we raised this year from all of you and the people that you know to support our work in Central America, with a particular eye on scaling our impact and our work. So with that, I thank Michelle and Linda and Lulu for their time, and hand it off to Michelle. Thank you.
We're going to try this out without the mic, right?
Yeah.
Yep. All right. Yeah. You can't hear, move forward, slide the chairs up. Why do you think you're sitting here? What was it about you or you? What skill set do you have that you think was the most dominant reason why you are here today?
Well, I think we're here because we care about women. We also have loved our careers, and we're very happy to talk about whatever we've learned in our professional lives that might be helpful to other women.
But what about you got you to where you are? It's more the spirit of the question.
I think we'll have to give Wellesley some credit, but also...
But you got you into Wellesley.
Yes, I got myself. I was born, I had a wonderful mom. We had 4 girls in our family. It was a very strong matriarchy, very strong women in our family, women who never thought there was any limit to what we could do. And it was natural that I would be drawn to Wellesley College, which also really empowers women to always do their best and to make a difference in the world. And I think I was very lucky that the thing that I truly loved, which is investing, also happened to be something that I was good at, and it allowed me to have the success to make a difference.
Linda?
Yeah, I agree with Lulu. I mean, I think all of us can give credit to our moms and our grandmothers and sisters. And when I got the Lifetime Achievement Award a year or so ago, and I accepted the award, I said for our mothers and our grandmothers, and it was very meaningful to me because when you think about prior generations, Lulu and I are the sort of the front edge of the baby boomers, and we were the first ones that really had opportunities that prior generations didn't. And you think about the talent pool that was out there and the intelligence of all the women that came before us that were really limited in what they could do. If they had careers, it was great. My mother said, you know, you have to major in education because that way you'll get a job. And I said, I hate kids. So I said, well, can you imagine me in a classroom with 35 children? She said, no, you're right, major in economics. But, you know, so I think the fact that opportunities were starting to open up, and then I think it became, you know, what you were interested in, and we'll get into this hopefully a little bit later, but, you know, find something you're interested in and passionate about, and then I think you can be successful. And then it's, you know, matching yourself up. And it was sort of interesting when you think about Lulu and I having worked together at Equitable. You know, in the early days of women even being able to get a job in investments, the banks weren't hiring women to do that. If you were going to get hired by a bank, it was going to be a branch manager someplace. They would not hire you in the investment department. It was really insurance companies that I think really opened the way, and then it branched.
Why do you think that is?
I don't know. I think, you know, in my case at Equitable, a colleague was there for about a year or two, and I think and I think there's another thing we have in common. I think if a company or an industry hires a couple of women and they're successful, they'll say, okay, I guess they're not so bad. You know, I'll hire some more. And that's why I think we have both felt in our careers, when you are a trailblazer, and we were, that if we had failed, we were going to fail for a lot of women. And I always felt that responsibility very early on because, you know, I became an analyst, you were an analyst, we became portfolio managers.
So you were aware at the time?
Oh, we were very aware at the time because we were really fighting a battle to get from one stage of your career to the next one. I mean, I remember when I first became a portfolio manager at Equitable.
Which is a big deal, right?
Which is a big
You're going to
deal.
get,
We were
right.
making big pension money. This was AT&T and Caterpillar Tractor and Shell Oil.
And you were managing how much?
It was a lot of money. I forgot.
In the billions.
In the billions. And they would take us out to visit our clients for the first time. And they would look at me and think I'm part of some sort of, you know, equal opportunity thing. I wasn't really qualified. Who is this young woman that's here running our pension fund? Whereas they could take a man out, and this happened. This was Al Stewart, a former colleague. He and I had exactly the same number of years experience. They both take us out to see our clients, and there was not a question in anybody's mind when he walked into the room was whether he was qualified or not. I walk in the room, I get a whole different set of questions. And our boss at the time said, if I hadn't been with each of you, I never would have believed it. But that's the way life was, and this was in the late 70s by the time I became a portfolio manager. So it was very unusual. I mean, other than some of you may know Jane Matt Gould, who was at Alliance, but I mean, other than Jane, I don't know another woman portfolio, on the institutional side, another woman portfolio manager. So
In those days.
in those days.
Right.
So I mean, now there are a lot of them and hopefully very successful. So I felt very early on, as I'm sure Lulu did, that if we failed, we were going to fail for a lot of people because it would take a while for them to then say, okay, fine, women can do this job. They're going to be accepted by their clients. So
I had a slightly different experience. I think I pushed myself, not so much because if I failed, I was going to make it hard for the women. I pushed myself, one, because that was the way I was, but I also felt that the world needed to have successful women. So it wasn't the fear of failure, but it was the carrot, that if I succeeded, I could help to blaze a trail for other women, because I began my career really at DLJ, a wonderful white shoe banking company, and all the women there were research associates, and every male analyst had a pretty little research associate, and she kind of followed him around.
So Mad Men.
Oh, yeah. And I was determined that we were not, that the women should move upward. But many of the women didn't want to or didn't know they could, so I became the first research assistant, which was an upgrade from the associate. And then I became the first junior analyst who was a woman. But I kept thinking if I kept pushing it and pushing it, other women would see it was possible. And so in a way, that was what was driving me. And I guess, you know, I think the difference between the two of us, being Asian helps. Because when I was in the same generation as Linda, but because Asians are supposed to be brainy, even we're not always, when I showed up in a meeting and I was the only woman analyst or portfolio manager, they kind of assumed I was there because of my brains. And so I think...
Because you were Asian.
Yes. I think the Asians, and I also picked industries that were very male-dominated, conglomerates, aerospace, defense, fertilizer, capital goods. So they kind of figure if I was there, I must have earned my way there. I wasn't just following retail or supermarkets or something like that. So in a way, I kept figuring out how do I differentiate and make sure that they don't think I'm just another little young woman who wants to work there.
I mean, there were some advantages. I mean, I was a technology analyst in an era where there were no technology analysts, women technology analysts. And the funny thing was you'd go to a luncheon meeting with the CEO of a major company, and they sort of like treated you like their daughter. Oh, dearie, come sit next to me. And you'd sit there and meet these people for 45 minutes before they got up and gave their speech, because you could do that because they thought, well, we were sort of non-threatening compared to the guys.
Right.
So
But it was great. You got much more.
It was great. So, I mean, so in a sense, you had to sort of use your uniqueness at that point and say,
Absolutely.
Although one funny story, I went to Texas Instruments in Dallas, I guess, and the secretary came to get me to meet the CFO, and she said, I've never seen a lady, I'm not going to do a Texas accent, but in a Texas accent, she'd never seen a lady analyst before. So I said, well, you're seeing one now. And it was just, it was just so bizarre because they just didn't have any frame of reference, so, I mean, things have changed a lot, and, it's thrilling that there are so many women now in our business.
But the point that Linda makes is a good one that I often share with younger women is that because there's a downside to being a woman or the only in the room, but there's also an upside. Because if you are the only, you're going to be much more memorable to either a potential client or to someone that you're trying to get information from. If you're an analyst and you're dealing with a CEO and there are 20 analysts and you're the only woman, you are likely to get the seat next to the CEO. And he's probably going to be a lot nicer about answering your questions than the guys who are pushing hard. So when you can, in an appropriate way, use your uniqueness to your advantage.
So asset management, we see a lot of women. From my experience at CNBC, getting asset managers who are women on television is much easier than getting female traders. Why do you think there are so few female traders? I walk onto a trading floor, and to this day, there's hardly any women.
I have
Go with your theory.
I've known a lot of traders in my life, and I think the nature of the beast on the trading desk is not the kind of work that generally would appeal to women. And there are always going to be exceptions, but it's a very transactional function. It's not relationship driven as much, though at the very high levels, a very senior trader is going to be dealing with very, very senior clients, and you're going to be trading hundreds of millions of dollars.
And that's going to come through relationship building.
Yes, and that's going to be relationship, but there's not the intimacy, the immediacy of relationships that you have as an analyst. You're going out there, you're meeting with companies, you're talking to CFOs, heads of marketing. Same thing with portfolio managers. You have a relationship with the partner or the client. And these are all, this to many women is more satisfying than the rat-tat-tat-tat of a fast trade.
Yeah, I would agree. I think a lot of women are interested in the research aspect of what they do, either working on companies or managing a portfolio or dealing with people. And, and I think the culture of the trading desk is still probably not that different than it was 35 years ago. The language and the, it's like, who wants to sit there with that kind of abuse? I mean, it never would have interested me.
The law has changed.
Yeah, the law has changed. It can't be quite as abusive. But,
But they abuse each other, too. The men abuse the men.
My trader, Joanne, right here, Joanne was my trader at the Ford Foundation. So, I mean, I think on the institutional side, there are women traders. You're just not going to see them.
Well, I was going to say that there are definitely, I think, more women buy-side traders than
sell-side
traders.
Okay.
Yeah,
I think the buy-side is a different environment for everybody, men or women, as opposed to being on...
Is it a progression? Like, are we going to get to, was it first it was asset management, then it was your side of the trade? Does it ever, do we ever, or is it just...
I never wanted to go to the sell-side.
She had to deal with them.
That did not interest me.
Okay.
I don't know if it's the same thing where, I don't know, that just did not...
And it's so not that much profitable anymore.
Why
bother?
But there's also a difference between a sales trader and a prop trader.
Yes. Oh, absolutely.
And the sales traders are often women, even
That's
on
true.
the sell side,
That's
so
true.
there's a relationship.
Yeah.
Right.
But the prop traders is definitely male dominated even now. I don't even know one, even though I spent 9 years on the trading floor at Credit Suisse.
And also on the trading desk, it's so much, what did you do for me today? And that drives a relationship. I had a woman who headed up my trading, and she had come from a very large hedge fund before coming to work for me. And she said it was like on a battlefield. On a bad day, the guy who was running the shop, he would throw waste baskets, throw chairs at you if you made a bad trade.
And men too.
Oh, yeah. Her boss was a male, but he would throw a waste paper basket at you or send you home for the day if you had a bad trade.
Right.
It was just such a hyper-tension.
Let's talk about the markets this past week. It's so exciting. I mean, I loved it, but I'll take a 1,300-point day any day. And I wish Bill Gross would quit every day. It's so fun. What happened last week? Any ideas?
Oh, interesting. Well, we hadn't had a 10% correction in 2 years plus. So we were way, way due for a correction. And people who know what they want to own and are waiting for a pullback got a great chance.
So you bought?
Oh, yeah.
U.S., international, no?
No, you just have to I think you really have to know what you want to own in this kind of volatile market. So when it goes down on very bad days, you have the conviction and the guts to step in there and just say, okay, it may not be bottoming today, but it's getting within my buy range finally, and I can begin to average into a fuller position.
What do you think happened, Linda?
Oh, yeah, I mean, I think it was just a confluence of some, bad economic news and the Ebola scare. I mean, again, on the media, you'd think we were all coming down. Not blaming you, but I mean, CNN, and it's all Ebola all the time. And
Well, they haven't found the plane yet, so.
For a while it was the missing aircraft.
Right, I saw it all
that stuff. So, so I just think it's whatever happens, and we had not had a correction on a long period of time. And you've got a lot of sort of trigger-happy people. You've got a lot of money run by, I don't want to say the evil hedge funds, but the hedge funds that probably had increased their their net positions, and it's getting toward the end of the year. You want to lock in gains, and so I think that it's a trigger-happy mentality. I mean, I've been lucky enough that I've been working at institutions like Ford and Helmsley, where it's a very long-term strategic view of what your asset allocation should be, and you can sort of play around, move it slightly. But I think you use these things as buying opportunities if you have conviction, and and I think the underlying fundamentals of the markets are still pretty strong. I mean, the Fed, it keeps telling you, Janet Yellen, woman chair of the Fed. I mean, in my lifetime, maybe we'll get a woman president. Who knows? So they're telling you interest rates are going to stay very low for a continuing period of time, and the Fed is forcing you to take risk in your portfolio, and it can be equities, it can be junk bonds, it can be lots of other things. So, I mean, as long as that's going to happen, I think people are just going to, have to suck it up. And
do you believe Mario Draghi when he says he's going to do whatever it takes? Will he be allowed to? Do you ponder that question?
Well, he's got to deal with Angela Merkel.
Right,
right. She's got to deal with her people, too.
And she's got to deal with her politics, too. But, I mean,
that's a hedge that you said, that's uncertainty, right.
But a lot of the other, I mean, I think the French and the Italian and everybody else are sort of saying to Merkel, listen, I mean, we live in democracies, and if we have constant unemployment and a very bad economy for years and years and years, it's not going to end well. We've seen this movie before. So
this break in energy prices is really very positive for
you don't see it as this deflationary whiff that is.
No, I think it's a matter of supply and demand. There is some the demand is softer as European economies are beginning to wobble. And China is just not accelerating, though it's not going to massively decelerate. U.S. is on a steady course. So I think there's a bit of a demand issue, but there's also a very big supply issue. There's no question Saudis have turned on the spigot. The U.S. Production continues to accelerate. And I think it comes in, it's politically, it's also a very opportune time for those European nations, particularly Ukraine, depending on Russian oil, for the price to come down. I think Putin's really trying to be very macho about this, but I think he's really hurting. I think the trade embargoes, as well as the price of oil, which is 90% of the economy, that's really going to hurt.
He needs that badly.
No question.
Either one of you own treasuries? Or treasuries in a bubble? How about that?
Well, yes. I mean, clearly the interest rates are lower than what you would hope they would be at this stage. Particularly the U.S. economy, is continuing to grow, and fortunately inflation and stated inflation is quite low. So yeah, they're lower than what they should be in a normalized environment. But I guess the thing that I worry about is the spreads having narrowed so much that some of the deals that are getting done, I mean, things that you thought were not going to come back for like another generation, from 2007.
No money down, blah, 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 covenant light loans.
Have I got a deal for you?
Yes.
But then again, I'm getting so old that when some portfolio manager comes in and they give you a presentation and say, our portfolio managers have been managing money for 10 years. Shoes older than that. To me, 10 years is sort of like nothing. So so I think people have short memories, and maybe sometimes it's good to have a short memory. I remember as an analyst and then a portfolio manager, you'd have this long list of stocks, you'd say, I'm never buying that stock again. I've been through with this management team, they don't know how to run it, I'm not going to do it. And by the end, you couldn't buy anything because you hated all of them. So I think at some point it's good to have a short memory because companies do change and industries change. But on the other hand, it looks like the financial gamesmanship, and I worry about it. You've got all this direct lending going on. You've got all this sort of, the banks are not lending anymore, so someone else has to do it. So whether it's hedge funds or other kinds of money managers coming out, but eventually that money has to go back. I mean, when you put money in a private equity fund or a loan fund as a foundation or an endowment or a pension fund, you expect to get the money back at some point. It's not your money. So, how they're going to refinance all this stuff when it comes due is going to be another interesting question. So that's what worries me is I think credit markets more than anything else.
And because of that, there's always the sense of security sitting in treasuries. And also with Basel III, all the financial service companies, insurance companies, banks, they all have to have huge reserves and very low risk assets to be held in reserve against whatever they're doing in trading or whatever. So there's always going to be that kind of need for treasuries, which may be higher than people expect. You're forced to hold treasuries, not because you want to.
I've heard, yes, just like oil, I've heard it's become very much a supply and demand issue.
Yeah, right.
And despite all the debt that there is in the world, issued by governments, it's still not enough to satisfy the demand created by this.
Right.
So interesting.
And if you think about the U.S. Treasury, as the safe haven, it's a safe haven not only for U.S. investors, but for global investors.
Right.
Because if there's other places that look better, Japan looks worse than we do, Europe looks worse. Their demographics in both Europe and Japan are worse than ours. So you say, well, do I want to own yen where it's worse than we are? Europe is worse than we are. So again, there's the flight to quality around the world. I mean, there was this whole theory a couple of years ago that all of the money in China and Japan, it was all going to get out of treasuries and put it where?
Right.
Right. Yeah.
So everybody sits there and...
When you consider your philanthropic activities, do you spend as much time thinking about them as you think about your investing in terms of, offering your time and your money?
I do. I spend more of my time on my outside activities than my own money. I mean, Lulu's got a lot more than I do. There's a funny story to that, by the way, which I'll talk about in a second. But no, I actually spend most of my time on my nonprofit activities on 4 different investment committees, and I'm also on the MetLife Funds board, which Liz Corriere, where are you, Liz? Here she is. Okay. Liz is the head of the MetLife variable annuity business, among other things she does at MetLife, and I've been on that board for, I don't know, probably 10 or 11 years. That's very time consuming because the SEC looks over our shoulders, so you have to spend a lot of time on it and read a lot of material. The funny part of the story, so I don't spend any time on my own money. I actually have somebody else manage it. But the funny part of it was that when I went to Ford at Ford Foundation in 1982, about a year later, I got a call from one of the managing partners at Jennison, John Hobbs.
Oh, yeah.
And he wanted to see me, and I knew it was a great firm. And he said, well, let's have lunch. I said, okay, fine. And he said, we'd like to hire you at Jennison. We would like to hire another senior portfolio manager. And I think they were particularly looking for a woman. I don't think they had women.
What year was this? Was it
This
before
was
I went there or after?
Yeah, it was before you went there.
Okay,
before you went there. So I said, John,
And that year is what? That's 19?
I
it was
went
probably
there-
80...
I went there in 88.
This was probably...
In the
When
19s.
did I get to...
Before the turn of the century.
82. This was probably 83, 84.
Yeah.
Okay. I said, very flattered. I normally would love to interview for the job, but I had just gotten a Ford. I had put the whole team together, and I said, I love what I do, and I would really feel very guilty if I left these people. And so I said, no, I don't even want to interview it. And the next thing they knew, they hired you.
Well, quite a bit later, and I was still the first woman portfolio manager they had.
Right. But then they sold out at Prudential, and all the partners made a ton of money. So Lulu...
No, I went after they sold.
Oh, after they
Yes.
sold. Oh,
So I
okay.
didn't have...
So she's poor.
By the time when I went there were very few women at Jennison.
Right.
By the time I left, we had really built up the women in portfolio
Right.
and in the analytical rank.
Right,
So
right.
really, I think it was good. They made progress.
Oh, good. Well, anyway, so all this time I thought you were there when time
No,
flew
no,
by.
no, I didn't. I wish I had been.
But anyway, so anyway, I spend most of my time on my
Philanthropic. How about you, Lulu? When you think about how you're going to devote your free time?
I really give almost all my time now to my board work because I retired. Talk about good luck. I retired my clients in 2008, just before the financial crisis.
I'd rather be lucky than good, right?
I decided at that time I had, Tupelo had run for 10 years, and my life tends to run in 10-year cycles, and I figured you want to quit while you're ahead, and you don't want to close, retire clients when things are going badly. Things are going pretty well then. I had wanted to do to go on a corporate board, but I'd never thought I wanted to have a conflict when I had clients to be in a corporate board where I got inside information and I could not use it for fear of doing anything that would be
illegal?
Yes, well, or even gray area.
Right.
And so I retired my clients, and then I took on the board membership at MetLife, and it was really a wonderful time to get into because it was just going to the crisis, and you never learn an industry or company better than when times are hard. You really learn how the industry operates. You understand the people. How you can manage through a crisis is probably the best experience that a board director could ever have. But at the same time, I also had the time to devote to some of the not-for-profit boards that I was very passionate about, but never had the time to really go. I was always rushing to board meeting, rushing out, looking at the market, checking the BlackBerry, and I thought I really wanted to have the time to be a good board member.
Right.
So I spent, my board focus has really been in the arts and education, and in each one of the boards, I try to really advance women's positions and women's opportunities.
What do you like about Trickle Up?
Well, we're learning more about it today. Linda did a little missionary work on me at lunchtime.
Yes, well, I've been on the board. I was the honoree for the Trickle Up Gala in 2009, and I joined the board, I think, about a year later. I chaired it this year. A year later, and it was just everything that I would look for in an organization in terms of their mission and how they go about doing what they do. And it's just again, if you're trying to make women's lives better, there's no place better to start than with the poorest of the poor in places that nobody else reaches. It's people like to do things that make them feel good, and this really makes me feel good. It really makes you think that when you look at the data that we've generated over the years, when you look at the small groups of women in these villages and how their children's lives improve and their own standing in their community improves. And I think the most attractive part of it, and you all know this because you were involved with 100 Women, is the fact they give women business training. And so they don't just sort of give them a loan and expect them to pay it back, which, again, having been at Ford, we did a lot. We sort of generated that whole microfinance business. But, the fact that these are grants where the women can run these businesses and get help, get real help, is just extraordinary. So it's great. It's very rewarding to me.
Questions from the audience? Yes, go ahead. Why don't you stand up? What's your name? What do you do?
Jenny.
Hi, Jenny.
I just came from an interview. So.
You're going to do something soon.
My question is, as someone coming out of a career break, have you ever taken one?
No.
Career break. Have you ever taken a career break?
What is that?
It's when you're not working. When you stop working.
Yeah, you have a couple of kids and decided to take them off.
Did you work through kids?
I don't have kids.
I worked during, while I was raising my son, but so much of it depends on having a really good life partner and having really good luck with childcare and maybe having some family around so you can park the kid when the childcare is not available. But I think we were just saying before during drinks time that I always tell the young women who are just beginning to think about family and their careers is that make sure before you even start the family, have a heart-to-heart talk with your life partner and just have it very clear that the kids belong to both of you and both of your careers have to be accommodate it if we're going to have a family between the two of you. And once this is all laid out very amicably, before you have a crisis mode afterwards, but have an agreement beforehand so that you really are facing this as a partnership. Because I think men understand the word partner. They may understand it better than spouse. But I think that's a good thing to have in advance of when you share lives together and you share responsibilities, that both sides understand that this is truly a partnership and it's not just the woman's responsibility to make sure the children are taken care of. That helps a lot.
Thank you.
Good luck. Go ahead.
I was just going to mention, I'm at JP Morgan and we have a reentry program for women who have taken career breaks. I think more companies are trying to copy that model, so I'm happy to talk afterward.
There you go.
Yeah, there you go.
And my question was around mentoring younger women. You know, what do you like, what do you not like? Where do you think women that are 5 or 10 years out of college, where do you think they're getting it right? Where do you think we might be getting it wrong?
In terms of their mentoring relationships?
In terms of sort of what you've observed of us in the workplace. So the context for my question is I mentor a lot of women that are just coming out of college, and trying to hire them into the corporate world is interesting, especially with the millennials. They sort of view things differently. And I'm wondering if you have any of those same opinions of younger women and where we can improve.
Right.
I never had to deal with the issue because we had a pretty senior staff, so we didn't tend to have, we weren't hiring people right out of school or anything like that, so I'm probably not the right person to ask.
Well, I do a lot of mentoring into the Wellesley community as well as into Columbia Business School community. I'm on that board, and I've been very supportive of QUIB, Columbia Women in Business, which is by far the most effective student organization on Columbia's campus. So they're terrific women, and actually they were the ones that really kind of got me to volunteer more time with Columbia Business School. I think we want young women we work with to appreciate that we have really crazy schedules, and there's not the time for one-on-one mentoring that we would love to do, but we just don't have the time. So we're very happy to speak at groups like this. Sometimes you go to speak to a group like this and you get 20 business cards, and they all want to call and email and find out if you can help them do their resume or help them find their job, and there just isn't the time. But I'm more than happy to do group work, or even once in a while get a smaller group together, maybe Wellesley women, Columbia women, or women on Wall Street, and be able to leverage the time to spend with people, because they really weren't women to mentor us when we were starting out, none at all. And I think we are more than happy to help out, but it's just within the constraints of time. And I think it's very important that young women don't have a sense of entitlement. There's nothing that's more of a turn-off to a woman who's glad to give their time, but to have a young woman arrive and say, well, here I am, be my mentor, and not having done any work at all in terms of preparing how you want to maximize that short amount of time you have.
I think one of the difficult things is that, and maybe I'm just 3 generations removed from the younger women today, but again, because the era in which we were developing our careers was so different, and I think you're right, it's the sense of, I mean, I was just thrilled every time I got a promotion, and thrilled that, I was making all this progress, and I never thought I would get to where I ended up getting, which is the chief investment officer. And I think women rightfully now have great expectations. They think I went to a great school, and, I work hard, I do everything. There's no reason I can't get to the top. And I think to extent, I think you're right. I think you need almost the next generation. I don't think you can have people from 2 different generations, because it's sort of like, what do you think, you're entitled to everything right away? So I think you almost have to mentor somebody that's closer to your generation, the next generation, but not sort of 2, because I think if I were doing it, I'd sort of like
smack them
down,
around.
Because and again, part of it is, well, who's their ultimate boss? Is it, it's probably going to be a guy, and is it going to be somebody closer to their age, or somebody, I mean, I think one of the issues when we were coming up was the men we were working for, were probably in their 60s, and, there's nothing wrong with that, but, so they were even more backward than anything else. So, so you had to convince them, and you couldn't be threatening to them. And I think that's one of the things that some of the bosses are going to look at some of these young women and say, they'll look at any sort of millennial and say, well, they want my job like right away. Like they think they know everything. And so I think what they need is someone to say, you're going to have to show your intelligence, show you know how to do the work, but just be a little bit humble at the beginning and just don't pretend you know everything.
The advantage to being our age and our generation is that we do have a lot of credibility as far as the men are concerned. I mean, we've been in the trenches with them. They've done well, we've done well. So when we make an observation about inequities in the workplace, difficulties that young women have, men more...
You're not a complainer.
No, we're not complaining, and they will listen. And I think that's very important. And two, even though we're now a few generations above the young women coming to the workforce, there are some time-honored problems that continue to exist. Women are not good at knowing how to ask for a raise or to know their value when getting their year-end review, and they go home and feel really sad rather than get angry. The men get angry and demand
They scream
a raise.
right in the meeting.
Whereas the women go home and they feel really intimidated and what's wrong with me? And this has to change. And knowing how to know your worth, knowing how to present your worth in a very reasonable manner when your job is being reviewed. And very often, and I know there's someone here that we've had this conversation with, who very successfully was able to get a much better raise from her from her boss after she very calmly explained what her contribution had been for the year. And he said, well, I didn't consider this, and I should go back and reconsider what your raise should be. But these are all things that matter, and how to deal with men. Men alone are very easy to deal with. Men, when they're in a tribal mode, are terrible to deal with. So men together, they bond and they become tribal, and they close ranks. But if you can if you can divide and conquer, you can much better develop male colleagues and male supporters in the office.
And it's not like it's intentionally mean. It's just
No.
it's like a pack of wild dogs.
Absolutely.
Takes over, and they're just they talk sports.
Yeah.
And,
Yep, and they close ranks.
Yeah.
And if you complain, I get enough of that at home. My wife complains.
Right.
You're sort of seen as this different animal. So.
There was something with
I'm Susan Watson. I was in the investment business in the 70s and 80s too. And now that we're in an election season again, we're hearing this 77 cents on the dollar pretty much every night from Andrew Cuomo. And I wanted to ask you whether and you touched on this, Lulu, whether you felt like you were discriminated against in pay over the years. Do you think you made similar to men? And if not, do you think it was because of choices you made or because of discrimination? It's a big question, but...
Well, I'll tell you what happened to me. When I first went to Equitable, not that I was making a lot of money, I was there about a year, and I found out that this one other guy, this guy who started exactly the same time I did, was making, I don't know, probably 20% more than I was. And, I went to my boss and I said, could you just sort of explain it to me? We had the same education, same experience, and they hadn't even thought about it. So they gave me the raise, but after that, it was okay. And I made lifestyle choices. People will say, well, why didn't you go to Wall Street, or why didn't you go here? I said, I love what I do. When I had the opportunity to go to the Ford Foundation, it was fabulous because it brought together my interest in philanthropy with my interest in investing. And could I have gone to work on Wall Street? Yes. Could I have gone to the sell side?
And you would have made a lot more money.
Made a lot more money.
You'd be closer to the 100
cents. My life wouldn't
cents.
have been my own. And, if somebody says, get on the airplane and fly to Australia for 2 days to make a presentation, you got on a plane and you flew to Australia for 2 days to make a presentation. And that was just a choice I made. So I never complained, so I have not experienced that. But,
So the spirit of the question is the 77 cents on the dollar because a lot of women are making that choice and choosing not to go to Wall Street where you can make the 100 cents.
I think it's a
or
mixed
is it
issue.
discrimination?
I think part of it's a mixed issue. Part of it may be a sort of level of experience. If people are doing something for longer, they tend to get paid more.
If you leave the market for a couple of years because of a child,
yeah.
That's it, right? It's very hard to make that money back.
So but I think companies are much more aware of it now. So a big corporation is not going to, at equivalent, range and equivalent education, I don't think they would take that kind of a risk.
Right, but if you leave the job market for 2 years, your skill set suffers, right?
Right.
And so you're now 2 years behind somebody else, right?
And if you choose to do a staff job rather than a line job, you're
Right.
going to get, again, the mix is there. And for many different reasons, women often feel more comfortable in the staff position rather than on the line job. I've always opted to be on the line position wherever I am. So I like Linda, I never really ever had a problem with being underpaid. And one simple way to make sure I wasn't underpaid is every time I had my year in review and heard what my bonus and what my salary would be, I always asked what's the average in the department. Because I know if I've had a year where I was way above average and I'm being paid at the average level, I have a problem. But if I know that my raise was so much better than the average, I'm very comfortable. So it's not unfair to ever ask your boss what's the average raise or bonus for the department. Then you can measure yourself against it and right there and then explain why you think you should do better or you're very happy with what you have.
That is a great piece of advice. It really is. Because the bonus meeting is always, go ahead.
Strange question, but relative back to the mentoring issue. There have been a number of articles in the financial press that say women managers often throw their women employees under the bus. And don't mentor and in fact try to take away from. Have you had any experience with that sort of an instance?
Well, I have two people in the audience that works for me. So I'm going to say I was a great...
And so are they.
And, I don't think I ever did anything particularly for women.
No, it wasn't you, but
Okay.
have you witnessed that in any...
I haven't, but I'm sure there are women
Well,
that are lousy managers.
Madeline Albright was known to say that there's a special hell for women who don't help other women. And I hope she's right. And I also hope that it pertains really to an increasingly smaller and smaller majority of women. I think in the very early days when there were so few women who succeeded, they might have been very jealous about their success and they were afraid that any other woman who came along might either take away from the specialness of their position or be targeting their position. But now I think with women having achieved success in many different levels, I would hope that we're all reaching down and helping. And I see one shake of it, if you do have a bad woman boss, try to figure out what her insecurities are. And if you can get to making her feel comfortable and get her to thinking that you are her ally and you're going to make her look good, you can very often win her around.
And also check to see if she's also throwing men under the bus too,
Yeah,
right? I mean, some people are just insecure people. So there was another question over here. Go ahead.
Yeah, I'd be interested in your perspective of both the profit side and the non-profit side, and the world is changing so rapidly these days. Kind of what's your view on either leadership or leadership companies today? And I'd be interested in your perspective on that.
So the question is...
What makes a great leader today or a leadership company?
Oh, okay. I think a great leader, male or female, is someone who has a clear vision for the company. Because I think without having that, it's very difficult to be a leader and to inspire other people. So a clear vision of the mission, the objective, and then being able to articulate that to the people and attract great people to work and join him or her in pursuing that mission. And the leader is in a very privileged position to help to establish the culture of the company. And I think the best workers, the best employees, they don't stay for money. They'll stay, they have to be fairly paid, but they stay because they feel they are aligned with the values and the culture of the company they're working for. And I think that's how you win a great employee, body and soul. It's not just the body and the salary, but you want to get their soul, and they have to feel that your values, the company's values, resonate with their own.
I think it's a great answer, and I would argue that I think the qualities of leadership have changed a lot over the last 20 years because we're living in a culture where if a CEO does something stupid, like the Microsoft guy talking about women shouldn't ask for, I mean, all of a sudden it just goes viral. So something that you do that is insensitive, short-sighted, whether you treat your employees poorly or your customers poorly, it's out there. That didn't happen 20 or 30 years ago. There were a lot of really bad CEOs. I mean, we can all name them. But there were a lot of people who got there. I worked for 2 different insurance companies, and the head of an insurance company typically was some salesman who sold more insurance than anybody else in the district and you eventually work your way up. So there may or may not be anything in the vision. There may not be anything in their leadership style. They just were good salesmen. Mm-hmm. Then after the first set of financial crises we had back when, the third one I saw. It was all the CEOs all came from the finance side, or they were lawyers. And talk about lack of vision. Oof. These are people that really they got there because they were bean counters.
Right.
Yeah, they were playing
totally risk averse.
So there was no vision and no sort of sense of what do my employees, what do my customers want. So I think now we're in a different era and particularly in technology. Again, I think everything happens. You have to assume everything's public. Why these guys think their emails are not going to maybe make public some, who knows where, something will get public. So I think that the whole sensibility about leadership is going to change because people will realize if you're the board of directors and you're picking the next CEO of a big company, I think the kinds of sort of check mark, and I just went through this, I was on the board of Penn State until recently, and I was on the presidential selection process, and we interviewed all the university presidents and provosts, and the checklist of stuff that we were looking for was so different than what you would have been looking for a university president 10 or 15 years ago. And I'm sure you went through this in various places and other nonprofits. It's just a whole different world, and the ability to deal with the public, the ability to deal with employees, it's just complete fundraising. All of these things are just completely different than they were. So I think...
To follow up on what you said about the Microsoft gap, actually that was a very good thing because I think it really raised people's awareness that men, and I think he's not an evil guy. I think he just put the foot in the mouth. But I think there are men of goodwill who don't understand what they say can be very damaging to women. And I think just having this blow up makes him aware in his future dealings with his women employees. It makes every CEO in the world understand that you don't get away with this stuff. And I think...
But then he was wrong, right? I mean, he said it because he believed it. Right.
But he believed, but I think he said it without realizing all the implications of what he said.
Right.
And so, of course, he could regret leisure. But I think this will go down in every single case book. All the HR people will be making sure their CEOs know about this. And the leadership is going to be a lot clearer that you don't ever say this to women about not asking for what you're worth. So I think actually it was a blessing in disguise.
Let's leave it at that. We've come to the end of our time. Thank you so much, ladies. You were terrific.
Thank you for great questions.